For business owners who filed a tax extension, the finish line seems a comfortable distance away. September 15th is the official IRS deadline. Looking at a 6-week runway, you might assume you have plenty of time to gather receipts, reconcile accounts, and hand over your data. That 45-day cushion feels safe. But Paul Vasquez and his team at TaxLab issue a specific directive to their clients. Every document must be submitted before the end of August. If the IRS accepts returns through mid-September, why does the window for your financial data effectively close weeks earlier? Miscalculating the schedule often forces a transition from strategic planning to a frantic race against the clock. Let's do the math on that September deadline. On paper, you have exactly 15 days to finalize the work, but financial processing doesn't happen in a vacuum. First, we remove weekends. Then we subtract Labor Day. You are quickly down to 10 working days. Next, we account for technical requirements. Secure document exchanges and IRS e-filing systems require mandatory processing buffers. Finally, there is the review process. Complex business returns require the owner to review data and route digital signatures. That 15-day window is actually a 4 to 5-day bottleneck of viable working time. Within those remaining hours, a significant volume of technical labor must physically occur. Owner-operated returns involve meticulous requirements for S-corps and LLCs, alongside the precision needed for multi-state filings. Professionals are reconciling months of bookkeeping, cleaning up gig income, and conducting reviews of reasonable compensation. Compressing weeks of this deep analysis into a tight 5-day bottleneck forces the entire filing process to become completely reactive. There is a sharp contrast between a filer who waits until September and one who finalizes their documentation in August. When an accountant is forced to rush, they are restricted to reporting your financial history rather than identifying ways to change your future tax bills. A rushed process often skips the strategic planning for next year's estimates, entity structure optimization, and proactive deduction strategies. TaxLab emphasizes the ethical millionaire philosophy, the idea that wealth requires a proactively built, solid foundation. That stability is difficult to construct during a deadline panic. Submitting documents in this final rush shifts the focus toward mere compliance, leaving potential future tax savings on the table. For business owners wanting a maximized return, submitting documents by the end of August is a hard requirement. Early submission provides the time needed for a comprehensive consultation and year-round advisory. Securing those final weeks allows for the analytical depth required to fully protect a business owner's long-term interests.